What's going on, everybody? It's your boy Jonathan with the Rideshare panel. Today we are looking at a very dreaded topic, that is taxes for Amazon Flex drivers. So I've been doing Amazon Flex for the past few months, but I've been an independent contractor for about 3 years now. I started with Lyft or Uber. I've owned my own business doing marketing and consulting for local businesses, and I've been doing my taxes for a while now. So it's safe to say that I have a pretty good idea of what I'm doing. Now, this is not tax advice. I'm not a tax professional, and I always recommend that you consult with a tax professional because I'm not really responsible for this advice, but I do have some really helpful hacks that have helped me finish my taxes much faster. So I'm gonna lay out just the base of how to do taxes for Amazon Flex drivers, which actually is not that hard to do. And then I'm gonna show you guys a couple of tips and tricks that can make this a lot easier for you guys. And if you break it down into these easy steps, doing taxes for Amazon Flex is actually not that hard. Okay, when I first started doing taxes for Lyft or Uber, I kind of knew that I'd have to pay them the whole year, and I just dreaded it. I put it off. I knew it was going to be there. I didn't know how much to save, and it kind of just had me terrified the whole year. And then I eventually paid them, and it took me about an hour and a half to get through everything. And nowadays, I get through it much faster. So let me kind of lay out the basics here. Amazon Flex will send you a 1099. You'll get this form. They used to send this in the mail, they still do, but you can also access it online on the Amazon website. So it's really easy to get your hands on this. And then begin sending those out towards the end of January. So once you have that, you'll find a little form on your 1099 that tells you what your overall earnings, your gross earnings were for the year. You want to take that, and the second thing that you need to know, you should have been doing the whole year. If you weren't doing this the whole year, taxes can be quite a bit harder, but I have kind of written some tutorials on this, so hopefully you were watching. You need to be tracking all of your mileage as an Amazon Flex driver. You're responsible for doing this. The app does not help you with this. So you need to be tracking all of that mileage. I use QuickBooks Self-Employed because they have an automatic mileage tracker that kind of just does everything. Every time I turn my car on and start driving, they know that I'm in the car. They track that for me. You want to use that number, and most tax professionals recommend using the standard deduction, which comes out to be about 55 cents per mile in 2018, I believe. So you want to take your full miles and multiply it by the standard deduction, and that's going to be your total deduction for everything car related, for gas, for maintenance, wear and tear, oil changes, anything of that nature. Okay, this is your bread and butter. If you know those two things, if you can find your gross income on your 1099, and then you can find out what your standard deduction is, that's going to be the base of your taxes. Like, you can stop right there and be pretty close to the right number and be good to go. And as long as you fill that out right on your Schedule C, you're good to go. But there are a couple other things you can take advantage of, and I kind of want to let you guys in on this. One of those is using TurboTax. If you don't want to fill out this information on your own and look up a Schedule C and send that in, you can just use the TurboTax software. It will cost you a little bit of money, but it does make it easy. And if you're scared to kind of do it yourself, it's a helpful tool to have. I still use it just because it's worth the investment, just to save me a little bit of time. I always do that. A second thing that I do is I always like to double check my taxes, and there is a quick hack that you can kind of use. H&R Block has in the past, and I believe they still let you do this. They let you go in for a free tax consultation. They will sit there on the computer and run through all of your taxes and then spit out a number. They give you that number and let you see it, and they don't actually charge you until they fill out the taxes for you and send that number into the IRS. So you can basically have an easy check to make sure that you have the right number and run that against the number that you came out with TurboTax or doing the taxes yourself. And that will just help you sleep a little bit better at night and let you know that you're not going to have to pay penalties on taxes. Another hack that I like to use is to use an online tax calculator. You can just Google search this, do tax calculator for rideshare, and find a couple of tools that'll help you out. And you can also use this number to get you just a rough idea of what you should be paying. Obviously, always consult a tax professional because, doing things yourself and using free online tax calculators, while they are useful hacks, they're not guaranteed to give you the most accurate answer. But it does help you get a baseline if you're wondering how much you're going to have to pay. Totally recommend using both of those. Another thing that I do, and I can't fully recommend this to everyone, once again, not tax advice, but technically by the books, when you're doing rideshare for Amazon Flex, your mileage starts when you leave the warehouse and it ends when you come back to the warehouse. But for someone like me, I own and operate my own business. I have an LLC, And my business, part of that includes doing Amazon Flex tutorials. So I'm using a home office deduction, so a percentage of the mortgage on my house is actually written off because I use like 30% of the house for my business. So I'm writing off that much every month. That's a huge bonus. And that is my home office. So my mileage starts when I leave the office. The office is not the Amazon warehouse for me. It is my house. So I'm counting all of that mileage to the warehouse and back from the warehouse. That is not a recommendation to everyone, and it doesn't necessarily fly 100% of the time, but some people do that, so that is something that you should be aware of and potentially, take into account. The last thing that you need to know is that if you use the standard deduction, you also get other business expenses that you can deduct. So if you're, buying like a phone charger, a cell phone mount, maybe like a rack to carry items, or some sort of push cart for Amazon Flex, any of those expenses, even healthcare, other stuff like that, that is an other business expense not related to your car. Basically anything that's business related but not related to your car, you also get to use as a deduction. The last thing that I want to hit on, you definitely do not want to overlook this. This is very important, and that is with regards to paying taxes quarterly. 4 times during the year you are supposed to pay taxes. If it's your first year driving for Amazon Flex, or as an independent contractor or some sort of rideshare driver, you're not required to pay quarterly taxes. You can if you want to, but one of the rules for your quarterly taxes is based off of your last year quarterly tax estimates. So if it's your first year in business, your first year with Amazon Flex, you're not required to pay these. But if you've done it for a full year and you're on your second year, you are responsible to pay quarterly taxes that year. So you should just be giving a good estimate. As long as you're within like 10% of the actual number, you don't have to pay any penalties on those quarterly taxes. But what you should be doing is you should be tracking your gross earnings every quarter and then tracking your mileage and using those numbers. It's better to overpay with quarterly taxes because then you're guaranteed that you're not going to have to pay any penalties, and those definitely stack up. So it's better to overpay and just kind of look at maybe your mileage expenses plus your gross earnings, and then if you have any other expenses at the end of the year, maybe get some money back on those. So there is a safe harbor rule that you can apply quarterly when you're doing taxes as an Amazon Flex driver or as any kind of an independent contractor. And the way this works is you take your total taxes paid for the last year and then you divide that by 4 so that you have your quarterly estimates for each period during this year. Now, if you made over $150,000 last year, then you have to pay 110% of each of those 4 amounts. But for normal people like you and I, you're just paying 100% of that amount. And that's the safe harbor rule. So if you pay that amount, then you're guaranteed to not have to pay penalties at the end of the year if, let's say, you end up owing more in taxes. But for some people, you might be making less this year than you did last year. So paying 100% of last year's taxes doesn't really make sense. And in that case, you can use the method that I mentioned earlier, and that's just using your gross earnings for that given quarter, or for the quarter to estimate, for the last quarter to estimate the quarter going forward. You take your gross earnings and then just subtract your total miles by the standard deduction for your standard deduction expenses. And that's usually a pretty safe way to do it because the standard deduction expenses is most of your expenses, but it's not all of them. Usually you have some more other business expenses that you're going to want to hit later on in the year, but that way you end up overpaying a little bit, and it keeps you kind of safe from potentially not paying enough and having to pay those tax penalties. That pretty much wraps it up for doing taxes with Amazon Flex. If you have any questions, please leave those down below. Make sure you're subscribed to the channel as well, because I'm going to be dropping all of the latest rideshare news, rideshare updates, and other side hustles that you can use to earn more income as a rideshare driver and just as an independent contractor.